Y'all ready? Let's talk stock. This is Stocks for Beginner. In this video, I'm going to break down what is a stock, where you buy stocks, how you open up a brokerage account to go buy stocks, what's the worst case scenario, what's the best case scenario, how stocks are taxed, and what to look for when you're buying a stock. Alright, so we're going to jump right into it. First off, what is a stock? Essentially, a stock is a piece of a company. So once you go out, you buy a stock in Apple, or you buy a stock in Amazon, Google, whatever company that you have knowledge of, you're buying a piece of the company, okay? So like if you were to go out and buy every stock in Apple, you will own essentially the whole company. What is a stock market? A stock market basically is just a place that you exchange stocks. You know, you want to buy a stock, someone else has purchased a stock, they want to sell a stock, so it's just an exchange place for stocks. That's basically it. It used to be in the old days where you actually went and exchanged stock tickets, you know. But now in the day of the internet, we do everything over the internet. So that's what it is. How do you buy a stock? When you want to purchase stocks, you have to open what is called a brokerage account. This is not your bank account. You do not buy stocks in your bank account. You open a brokerage account. You can use Robinhood, Fidelity, Webull, Vanguard. Robinhood is very user friendly for newcomers to the stock market. It's very simplified, and it lets you buy partial shares. So if you're not starting in the market with a large amount of money, which I never want to tell people you have to have a large sum of money to start in the stock market. You know, even putting $100 into a brokerage account and buying partial shares, I think that's perfect. You have to start somewhere. And when you invest it, if you use Robinhood to invest, you can buy partial shares. So like you can literally go in there and say, I want to buy $5 worth of Apple. The only thing about Robinhood is at the time of making this video, I don't think they have like IRAs, retirement account, but you can open like a brokerage account for trading. So that's pretty dope. I recommend Robinhood. How do you make money in the stock market? That's a simple question. You know, when investing in the stock market, essentially you want to buy a stock, and when the price go up, you make money. I'm going to show you where you want to buy a stock and where you want to sell it. Okay. So if this is the stock market chart, right? Most people will tend to buy up here when the stock has risen a lot. You know, once it's popular, everybody want to buy it. Essentially, you want to buy down here, if that makes sense. You buy stocks when they're low, you sell stocks when they're high. So either all of these will be good buying spots. When the stock dip, you know, that's when you want to buy. It's kind of like if you go to Foot Locker or something, and they tell you the shoes are half off for that day or that week. That's when you want to buy it. But most people tend to see the stock market drop, and they're like, "Give me my money. I'm out." That's not what the wealthiest people do. Warren Buffett said, when there's a lot of joy in the market, don't touch it. When there's a lot of panic in the market, be greedy. You know, so when everybody else is like, I'm out, it's falling, buy stocks. You know, when everybody, oh, buy Apple, buy Apple, buy Apple. When everyone's buying, don't touch it. When everyone's selling, buy. Okay? That's just a quick tip. Why should you invest in stock market? And this is gonna vary for everyone. You know, it's some people day trade because that's just how they make their living. Some people swing trade hold stocks for 2 weeks or a month, and that's how they pay their bill. It could be for investing in the long term or whatever. But buying stocks is just it gives you a good percentage return, you know. So like if you put your money in a bank account because you want to save, most bank accounts are gonna give you in a savings account 0.01%, all right, or it might be 0.001. But inflation is on average 2 to 3% a year. So wealthy people don't put their money in a bank account because if this the interest you're gonna receive in a bank account and inflation is 2 to 3% a year, you're actually losing your money in a savings account. So wealthy people put their money in the stock market because you can get 10, 20, 5, 6% return and outbeat inflation, if that makes sense. Otherwise, with your money just in a savings account, you're losing money hand over foot year after year. What is the worst case scenario? The worst case scenario is you put your money into a stock and that company go bankrupt for whatever reason. Bad management, they can't come up with capital, you know, they're just selling crap or whatever. So you want to invest in good reputable companies, you know, like Apple. We all know Apple's gonna be around. Apple is one. I think it probably is the biggest company. I don't want to say for sure, but if I was a betting man, I would be betting that Apple is the biggest company in the world right now. So worst case scenario is the company go bankrupt. And whatever money you have in that company, you're going to lose. The best case scenario is you invest like X amount of dollars and you 2x or 3x your money, which means like making 2 or 3 times the money that you put in. You know, Amazon's up like over 1,000% or something crazy like that. So that's the best case scenario. As far as taxes, these are the 3 tax brackets you're going to get taxed on your gains. So anything a year and under is going to be 20%. If you hold the stock for 1 year plus 1 day, you only pay 15% tax. This 20% tax, that's regular employment tax, so that's the regular federal tax or whatever. And then this 0%, that's if your money is in a Roth IRA. You get taxed on the money before, but the gains you get in the Roth IRA, you pay 0% taxes on because the money have to stay in there till you're 59 and a half, okay? So this is the best tax return, but that's in a Roth IRA account. So that's basically the overview of what stocks is for beginning. You know, stocks is essentially just a piece of a company. So when you buy a stock of Apple or whatever, you're essentially just buying a piece of a company. The stock market is basically that. It's a marketplace for stocks. You go, you tell someone virtually, I want to buy this piece of a company. They say, okay, I want to sell it, and that's it. You make money when the stock price go up, or there's another way that I forgot about. It's called a dividend. A dividend, say for instance, and I'm just making up this price so it's simple. If Apple's trading for $100, right? And Apple give a quarterly dividend of 2%. When you buy a stock, you'll see the dividend price. And you buy, let's say, $1,000 worth of Apple. Apple is gonna quarterly, or whenever they pay out their dividends, they're gonna give you 2%. So 2% of $1,000 is $20. So you're automatically gonna make whatever the dividend price is on the stock. It's like a bonus, allowance, however you want to call it. So you're gonna automatically get that, and I always recommend that you reinvest your dividend, just so you know your compound interest goes up faster. But that's pretty much it. That's basically what a stock is, how you get into the stock market, how you choose your brokerage account, why you should invest in stocks, worst case scenario, best case scenario, the different taxes. I would just want to tell y'all, make sure that y'all going out, y'all investing in something. And like this video, subscribe if you like the content. Leave me a comment down and let me know if you're gonna start investing, what brokerage account that you're thinking about going with. And if you have any questions, leave it down in the comments below and I'll be sure to make a video on it. But that's Stock Market for Beginners 2020.